Hi everyone, Chad Shoop here with Automatic Profits Alert, and today I want to take a moment to reflect on one item from 2017 that I think will give us some indications on what we can expect in the 2018. So if you followed the S&P 500 this year, then I think we can all agree that it has been a really smooth ride. So smooth, in fact, that in 2017 we had one of the smallest drawdowns ever. Now, a drawdown is basically trying to figure out what the biggest pullback that the S&P 500 went through throughout the entire year. And in 2017, that pullback from a peak of any high and low point throughout the year, the largest pullback was just 3%. Now, to give you some perspective, from 1980 till today, the average pullback, the average drawdown per year is 13%. So we are well below normal. And a 3% number, you have to go back to 1994, more than 2 decades, to find a year with a drawdown that small. And in 1994, it happened to be a 3% drawdown as well. So what does this mean for 2018? So we had this historically low drawdown in 2017. We know that there was pretty much no volatility and that the markets just continue to climb higher. But can we expect the same thing next year? And the answer is no. That's not going to be the case. When we look at these historical drawdowns, we can see a trend where they'll max out, they'll go down to 25, maybe a 30% drawdown in any given year, and then they steadily get smaller. So it goes from 15% to a 10% to a 5% drawdown over a period of like 3 years. Now, it's not always that smooth and that quick, but that's the general trend that you can pick up. So once they get up to a very small drawdown around this 3% range, they tend to revert back to the mean and start to get larger. So in 2018, we can expect to see a much larger drawdown than we had in 2017. Now, whether it's a 5%, 7%, or a 10% pullback that we're going to see next year, I don't know. And nobody knows, really. We're not sure what kind of pullback to expect and exactly how steep it'll be. But I do know that when it happens, many people are going to claim that this is a start of the next bear market. And all I have to say is don't listen to them, at least not yet. I mean, we're going to go through another bear market at some point. Of course, it's guaranteed. But I don't think it's going to happen for at least another few years. So instead of panicking when we get this next correction, you should stay patient, stay calm, and use it as a buying opportunity. Don't flee, don't cut all your gains, don't exit out of the stock market. Instead, have some cash and be ready to jump back in once you see that 5 to 10% correction. And then you'll be able to sit on some nice gains over the next several years before we're at a point to where we are trying to figure out when the next bear market is going to start. And I plan on having more videos about what to expect in 2018 in the coming weeks, but this is all I have for today. If you like this video, be sure to subscribe to our page to continue to receive more great videos. And until next time, this is Chad Shoop with Automatic Profits Alert.